Hi, thank you everyone for joining us today. I'm Sheng Shi from Endowus, and today we are going to cover using CPF to achieve your financial goals. This session is specifically geared towards food panda riders or any gig economy workers for that matter. And you might be interested to learn more about CPF in general, right? So please listen in if you're interested on this. The session today, the information is meant for informational purposes only, and is so accurate as of early February 2024, right? So please take that into consideration when you use the information, and we'll just get started on the content, right? A quick plug about Endowus. We are Singapore's leading digital wealth advisor for all our clients' wealth, and that will include cash, CPF, and SRS. We focus a lot about financial literacy, and that's why we are delivering the content to you today. And a little bit about myself, I'm Sheng Shi. I'm the personal finance lead of Endowus. I also happen to be a lead in the partnerships team, right? So what I often do is to share a little bit more about, personal finance, how to use CPF, how do you use SRS, how do you get the most out of your CPF, right? So I'm the in-house CPF expert. If you have any questions around CPS, please feel free to ask me. Of course, I also happen to write a lot of the CPF related content on the Endowus blog site, which I'll share a little bit of later on, right? And of course, I also do a lot of webinars as well. So a little bit about this collaboration that we have with foodpanda. We started off with a survey where we polled many riders on what concerns them around their financial stability and how can they, work towards better financial goals for themselves, right? And one of the key concerns that they have flagged out is, how can they be more financially stable, right? Given that, their salary or the income that they make through riding may not necessarily be very stable, right? So done a we have done a recording of the presentation that I've done at one of the Riders Hub. You can look at the QR code or look at one of the links that are shared on YouTube later on, and it will show you the presentation that I've made, right? So please watch a replay and learn more from that session. Yep. A very quick recap about what I have shared with your fellow riders through that session. And also something that would still be very important for you to realize is that, as a rider, you are effectively your own boss, right? How much you earn is dependent on how much you ride and how much work that you have done, right? And, you are also effectively responsible for what's stopping you from riding more, right? These could be things like, illness and fatigue, equipment damage, family emergencies, and other personal commitments that will stop you from riding, right? So while you can have the flexibility on how hard you work, as with many of us, you still have financial commitments that you cannot scale back on, right? Be that your mortgages, be that your, the education fees of your children, any debt that you may have, personal debt that you may have, right? So you have to take that into consideration when you think about how you spend your money as well as how you earn your money, right? And with great flexibility actually comes with great responsibility as well, right? So some of the key things that you need to take note of, given that your income, is also variable, right, is to track your finances more carefully, right? Tracking your expenses, tracking on your needs and wants spends are more important than ever, right? And then the other thing is to also to ensure that you have enough cash set aside for emergencies, right? And last thing, and also what we are covering today, is how do you decide on how to use CPF for your financial goals, right? There is actually a lot of overlap between our personal finance goals as well as what CPF can be used for, right? So today I'm going to address a lot more on the general usage of CPF and how you can use CPF for your financial goals. Okay, so how does CPF work towards your financial goals? Um, Let me start off with giving an overview about CPF. CPF is a comprehensive savings and pension scheme that can help us with our main financial goals. And that would include things like your housing, your retirement, and your healthcare, right? So CPF started off purely for retirement, but as the years passed by, the government allowed CPF to be used for other purposes, and I'll be covering some of those later on, right? So CPF contributions in general is tax-free, right? And you can get fairly attractive interest rate from keeping your cash within CPF, right? So, this is a form of forced saving for many of us who are employees. And it will also be a form of forced savings for some of you who are eligible or who will be auto-enrolled into that mandatory CPF contribution, right? So let's talk a little bit more about how you can use CPF. So specific to, the three different CPF accounts, there's three different CPF accounts. There's the ordinary account, the Medisave account, and the special account, right? I'll be going into more details about it. But what you can see from this chart is that basically any CPF contribution from employment, right, will be split into ordinary account, Medisave account, and special account across different ratios, right? Generally speaking, the split in the ratios will be dependent on your age. If you are younger, there will be more money channeled into the ordinary account because you will need more for housing and maybe paying for your education loan, right? If you are older, then you will need more money for healthcare as well as retirement, right? More money will be channeled into Medisave as well as a special account. So that's how CPF will work. And I'll be going into more details about each of the different accounts later on. Right. So one of the main usage for CPF and the most immediate usage for many of us will be using CPF for housing. Right. So how do we use CPF for housing? And what are the must-knows around using CPF for housing? Okay, so the first thing to note is that CPF can be used for housing payments, right? Generally speaking, we can only use CPF OA monies as well as cash balance for CPF housing payment. You cannot use your CPF special account or your Medisave account for any housing related payment, right? So there is a limited list of things that you can use to pay with your CPF money, and that will include your down payment, your monthly mortgage, and certain of your build to order housing fees, right? Some of the legal related fees may not be payable by CPF, right? One key thing to point out is that any housing grants that you are getting from the government, such as the CPF housing grant, the enhanced housing grant, the proximity grant, those monies that you have been granted with will be refunded back to your CPF money, CPF OA account when you sell your property. And when you refund that, it will also be including your accrued interest, right? So before you get any grant, you need to, first apply for a HDB flat eligibility letter, HFE letter, right? And with that letter, it will tell you what's your maximum HDB loan that you can take, what's the grant that and from there on, you can find out what's the grant that you can be eligible for before you buy the HDB. Okay, so the next thing is on HDB loans. For HDB loans, you need to be aware that there's a difference between HDB loans as well as bank loans. For HDB loans, you can borrow up to 80% of the purchase price of the HDB, right? Comparing that against bank loans, which is only 75%. So there is no penalty when it comes to early repayment of any HDB loans, unlike bank loans where there might be a penalty or you might have to pay certain charges as well, right? So for monthly income, there's no cap. There is a monthly income cap actually, compared to bank loan, right? So in some sense, you can think of HDB loans as a privilege that you are able to take, right? If you are of a too high a salary, you will not be able to take a HDB loan, right? The interest rate, especially in the current high interest rate environment, is actually very attractive, right? So for HDB loans, you are getting it at 2.5 plus 0.1, 2.6% interest rate, whereas bank loans currently they ranges around high 2%, really high 2% or even 3+%. Okay. The next thing about property purchase. right? Housing grants. I briefly talked about it. There's a lot of different permutation of housing grants. And it's really dependent on whether you're a single homeowner, whether you're first time or second time BTO or resale flat purchaser and so on, right? So there's different permutations of it. I will leave it to you guys to go and Google and check out whether any of these four schemes is applicable for you, right? So there's the enhanced CPF housing grant, there's the CPF housing grant for resale flats, proximity housing grant, step up CPF housing grant, right? So depending again on whether this is your first HDB purchase or whether you are taking a resale flat or BTO, the different schemes might apply to you. But again, I want to re-highlight that when you take up a housing grant, it's effectively the government putting in a sum of money into your CPF OA account, right? And you use that sum of money to subsidize your housing, right? And when you use CPF for housing, you would have to pay back yourself for the accrued interest that you owe yourself. Right, I'll go into a little bit into the details of that later on, but just keep that in mind. Okay, so yes, so this is a screenshot of the enhanced housing grant, and again, this is based on your monthly income, your monthly household income, right? So obviously, if you have a higher monthly household income, then you would be eligible for a lower grant amount, and the vice versa works as well, right? When you are having a lower income, then you will be getting more grants. Okay, so obviously, whether you're in the single scheme or whether you're in the family scheme, the grant amount also differs as well. Okay, again, I won't go into the details of this. Yeah, so how do you even think about CPF accrued interest? Many of us would have heard very, very different things about CPF accrued interest. And a lot of people actually have a very negative view about, seeing that balance within their CPF account, telling them that, they owe themselves X dollars of money, right? So this is actually a very important concept. I want to spend a little bit time on it, and hopefully I can take some questions from you guys as well, right? So CPF accrued interest, again, is effectively what you owe yourself, right? When you use CPF OA monies for housing, right? And when you sell your property, you will need to pay back the interest that could have been earned by that CPF monies during the period. So what CPF does is that every time there's a withdrawal of CPF OA monies for down payment or for the mortgage, they would keep track of it and also keep track of how much interest CPF would have paid you, if you were to leave the money there, earning that 2.5% per annum, right? The way to think about it really is that you owe yourself and you owe your retirement that 2.5%, and therefore when you sell the property, you need to return yourself that 2.5%, right? So you're not paying the CPF board or you're not paying the government that 2.5% difference, right? So you have to take that into consideration, right? And ultimately, whether you use, whether you do an early repayment of what you owe yourself in your CPF account, or carry on using CPF to pay for your mortgage as well as your down payment, it's really a financial decision around, CPF money, which is generally thought of as, longer term retirement money that's locked up versus your short-term cash flows, right? So it's important for you to make sure that you have enough cash at hand and not have too much money within CPF such that your short-term financial needs are not met. Right, so there is a simple comparison table that I would like to go through with all of you. Right, so if you were to use CPF for housing purposes, be it for down payment or for mortgage, right, obviously you would have cash at hand, right? If you have equal amount of cash and CPF at hand, you choose to use CPF for housing purposes, then you have your cash at hand, you're free to pay for your mortgage, you're free to pay for your expenses, meals and whatnot, right? So it frees up cash at hand, right? And if your cash at hand is not able to pay for housing purposes, then you would be able to use CPF for those to pay for your housing, right? But of course, when you use CPF for housing, then you need to be mindful that hey, you are sort of compromising your retirement and your longer term financial goals when you use CPF, right? So that's one thing to take note of. And the other thing to take note of is that, if you were to sell your property, there is a chance that, there's a negative cash sale. Meaning to say, if you were to sell your property at a not so high price, right? Effectively, all your property proceeds will go back into your CPF, right? But often this is a concern for people who want to make a capital gain from property, and property prices not going up as high as the accrued interest, right? But it's not a very big concern. A very common misconception is that, if you were to sell and if your accrued interest is higher than the property sale value, then you would have to pay back cash. That's actually not true. That's only the case when your property value is a lot lower than the market value as stipulated by CPF. Right. So that's a common misconception that I want to address. The other thing to take note of is that, if you use cash to pay for your property, then obviously, you have more money for your you have more CPF for your retirement, and you don't have to return your CPF or top up to CPF when you sell your property, right? In that sense, you can think that, if you were to make a profit from your property sale, then all of the profits will be in cash and you're free to use it. Right. But again, you have to think about your financial goals, right? Do you have enough liquidity to handle your short-term cash needs? Yeah. So let me take a look at the questions. Yeah, I don't think we have any questions for now. Let's carry on. If you have any questions around accrued interest, I think this is the best time to ask now. All good? Okay, let's carry on. So beyond housing, we can also definitely use CPF for healthcare purposes, right? I think some of you might already be aware, because as gig economy workers, there is a need for you to contribute to your Medisave. It's compulsory, right? So, what can you pay for using your CPF Medisave account, right? The way I like to think about CPF Medisave is like it's a piggy bank, right? An emergency fund for medical expenses, right? And also for insurance usage, right? So you can use it for insurance, you can use it for disability income insurance, you can use it for medical treatments, right? So generally, how would I break it down, right? So there are a few schemes. The bad thing about Singapore is that we have a lot of names and terminologies around all of these different government schemes, right? And some of them have very similar sounding names, and we get very easily confused. If you look at Medisave account and the schemes that are applicable to us, I think we can broadly categorize them into, the MediShield Life, CareShield Life, and of course, the general medical treatments, outpatient treatments, inpatient treatments, hospitalization treatments, and these are really the main use cases for Medisave monies, right? So for MediShield Life and integrated shield plans, the way to think about it is that it basically covers all your hospitalization and medical treatments, right? MediShield Life is really the basic compulsory health care that is administered by the government, right? And the integrated shield plan is really the add-on to it, so that you get a bit more coverage. You get more coverage. You would have the flexibility to choose to stay in the stay in a private ward, stay in a private hospital if you choose to, right? But at the base layer, which is the MediShield Life, it would be able to pay for large hospital bills and selected costly outpatient treatments, right? And as I was saying, if you want to upsize your medical coverage, then you can do it with any of the private insurers, right? And those will be called integrated shield plan. The term integrated really means that it's and layer on and add on to the existing MediShield Life plans. Okay, so that's on MediShield Life. Again, it's meant to be health insurance, specifically health care insurance. Okay, CareShield Life is a bit different, right? It's really more for long-term, disability income insurance, right? So if you were to meet certain criteria about, not being able to take care of yourself, you would be eligible for CareShield Life, right? So it's meant to cover long-term disability costs. And the payouts is actually more in relation to the cost that you would have incurred as someone disabled. Okay. And then lastly is really a catch-all, right? Medical treatments of all kinds, right? So these there's a list of approved medical expenses that you can use the Medisave account for, right? It covers inpatient treatment, outpatient care. Typically, it's meant for larger medical expenses. So, if you were to have a cough, catch COVID, you wouldn't necessarily be able to use the Medisave account for it, unless, you really, really have a very bad cough or flu that you need to be hospitalized, right? So the coverage could be up to $550 per day for hospitalization charges and $7,550 for inpatient surgical procedures, right? Typically, the hospitals or the medical institutions would let you know whether you can pay using your Medisave, either in part or in full. Okay. So again, I want to highlight that for the first and the third column, these are more on a as charged basis, right? Up to a certain amount, right? So in the case that your hospitalization treatment costs you X dollars, you will get coverage up to maximum X dollars, right? But in the case of CareShield Life, it's more in terms of income, right? Depend whether you need the money or not, as long as you are disabled, they'll give you a payout from it, right? I won't go into the details of it, but roughly you can know that this is the type of coverage that you can get when you have a Medisave account, right? And that Medisave account money is used to pay for the premiums of MediShield Life, pay for the premiums of CareShield Life, and being left in the Medisave account, earning an interest, and eventually being able to be that piggy bank for medical emergency funds. Okay. So yes, for many of you who have been riding for some time, you would also probably appreciate that there is a compulsory Medisave contribution, and this Medisave contribution is tagged against how much your yearly net trade income is, right? So this is a screenshot from IRAS and CPF. You would see the breakdown of percentage across different age groups as well as different yearly net trade income, right? So this is what is mandated. You need to contribute into your Medisave account, right? And a lot of it is really to pay for the premiums that would form the baseline of your insurance needs. Okay. And yes, that's about it for medical costs. Let me see whether... Yes, there's a question from Muhammad. He's asking whether CPF interest caps at 60K. Let me just quickly go back on a few slides. CPF that 60K, actually it goes really well into the next slide. So CPF 60K is not a you don't stop earning interest from CPF at 60K, right? If you were to just ignore the words in the slides and just look at this part, the part around that up to 5% on the first 60K on combined CPF balance, right? So that 60K is the additional interest that you're going to get in your CPF for that first 60K, right? So, for example, you have 20,000 in your CPF OA monies, you have 20,000 into your SA monies, and you have another 20,000 in your Medisave money. So the cumulative $60,000 would get an additional 1% interest from the government. Will earn you an additional 1% from the government, right? And if you were to have additional money beyond that first 60K, you will still be eligible for the 2.5% in your OA account, 4% in your SA, MA, RA account, right? So the baseline for CPF interest rate will be 2.5% for OA, around 4.08% for SA, MA, and RA, right? But of course, if you have for the first 60K, you'll earn an additional 1% beyond that 2.5% and 4%. I hope that answers your question, Muhammad. For a lot of people, they would want to try to get to that first 60K so that they earn that additional 1% interest from CPF. Okay. So since we're on this topic, that scenario of that first 60K, it applies for those people who applies for all CPF members, right? But of course, if you are older, right, the government wants to support your retirement more, right? And then if you are the age of 55 and above, you actually get an additional 1% for the first 30K in your CPF account, right? Capped at 20K for your OA, right? So what this means is that you can earn up to 6% in your CPF SA, MA, RA account. Okay, so additional 1% for the first 30K and additional 2% for the first 30K and additional 1% for the other 30K. Okay, so I hope that explains it. Yes, so back to the topic of retirement. You talk about the attractive interest rates already. What happens to your CPF at 55, right? I think there's a lot of misconception of what happens to your CPF at 55. Effectively, the way to think about it is that, a portion of your CPF monies would be transferred into an account that will be earmarked for retirement, right? And you're free to withdraw some parts of your CPF monies, right? So what happens is that your CPF retirement account, a balance for your CPF retirement account will be formed using your special account monies as well as your ordinary account monies, right? Of course, if you have a big CPF SA balance and you're able to hit the full retirement sum from that, then you don't need to transfer your ordinary account monies, right? So, of course, if you are able to hit the full retirement sum, you're free to withdraw the CPF monies. All right, but I like to highlight that, at the age of 55, your CPF, SA, and OA monies are effectively as good as a bank account, right? You can withdraw that money very freely. There are some restrictions because of some of the scams that are going on nowadays. So I believe there's a cap of a few $1,000s a day, right? But effectively, it's working at like a high interest saving account without having to jump through the hoops. Okay, so don't be in a rush to withdraw your CPF monies when you're at the age of 55. Maybe just withdraw a dollar or so that you're comfortable with the process. But yeah, feel free to withdraw it as and when you need it. But it's not no longer locked in, right? So for those of you who are not able to hit the full retirement sum, right, you are still allowed to withdraw up to $5,000 from your CPF SA or OA, right? Given that you have at least $5,000 in your CPF account, right? Again, any withdrawals that are going to happen is going to be from your CPF special account first, then your ordinary account, right? There's a sequence to this, and just also take note that any CPF contribution in the future, when you hit the age of 55 and beyond, would still be split according to the ordinary account, the special account, as well as the Medisave account, right? In this sense, for platform workers, your CPF contribution would also be split this way, right? Ordinary account, special account, and Medisave account. Okay, so that's on retirement and what happens to your CPF at 55. I talked a little bit about the retirement account and CPF Life just now, right? So what essentially is CPF Life? The way to think about it is that you are buying an insurance, right? And unlike buying a motorcycle insurance or buying a car insurance, this insurance is you pay one off, and then you get monthly income 10 to 15 years later. And it's a longevity insurance, right? So you're paying in the case that, if you live too long, you will still at least always have a monthly income, right? So you're insuring against the the good scenario or the bad scenario of living too long, right? Depending on how you see it, might be a good thing, might be a bad thing. We would like to think that it's a good thing. But regardless, right? So it's what we call an annuity product, right? And it gives a monthly payout as long as you live, right? So, for insurance product, it's not a fixed price that you have to pay. Depending on how much you pay, the more you pay, the more coverage you can get, right? And of course, there are some changes, some variants that you can, some options that you can choose so that you can pick a plan that makes the most sense for you, right? So there are two key decisions that you want to make. One is how much you want to contribute to your CPF Life, and then the other thing is how you want to spread out your monthly payouts, right? And this is really dependent on your preferred lifestyle, right? So there is 9 different permutations that you can choose from, right? The first thing that you need to choose is, what kind of retirement sum or rather how much you want to pay for your annuity product, right? You can choose between the basic retirement sum, the full retirement sum, and enhanced retirement sum, right? For some of you, without a very big CPF balance, you might be, you might have to choose a basic retirement sum, right? But for that specific scenario, you would be able to, the amount for basic retirement sum is $102,000, right? And you'll get a monthly income of around $870 from it, right? Of course, if you were to want to have more money, and you don't want to pledge a property, you can also subscribe to the full retirement sum as well, right? And the monthly income will be $1,600. Okay. The highest you can ever go to is the enhanced retirement sum. And with that, there is a higher monthly income from it. Okay. Then the next point is about how you want to go and split up your monthly payouts, right? Do you want more payouts? And if you were to pass on early, you want to have less money for your loved ones, or you want to have more money for your loved ones and less monthly payouts, right? So that's basically the choice between basic plan as well as the standard plan, right? The escalating plan is a variance of the standard plan, and you start off with a lower payout, but you get a yearly escalation of your monthly payout so that it sort of mimics how inflation works. Okay. What is the takeaway for this, right? You can see that this CPF Life scheme is actually quite powerful because it's an insurance product that basically insure you against longevity, right? And it can give a fairly decent monthly income, and this amount of monthly payout for the money that you put in, it's actually very attractive relative to some of the insurance products that you get from financial advisors, right? So you have to, I think it's prudent for you to go and take into consideration how do you want to use CPF Life for your own financial goals. And for those of you with more elderly parents, you can think about how you want to support your parents using CPF Life. Okay. And yeah, of course, if you want to go and do cash top-ups into your CPF, that's beyond anything in relation to your gig work, or beyond in relation to whatever that's compulsory. You can also do a voluntary top-up as well. So there's the voluntary Medisave top-up, the retirement sum top-ups. These are the two schemes available. And of course, there's a hard cap to it, right? So there's a hard cap of $205,000 for CPS SA top-ups, and $71,500 for Medisave. Okay, so that's it. There's also an additional benefit of tax relief, right? So the amount that you top up will be eligible for tax relief up to a maximum of $8,000. You can also top up CPF monies for your loved ones as well, right? You can do it for parents, grandparents, in-laws, grandparents as well, and you can top up for your spouse and siblings, right? So the criteria for spouse and siblings is that they have to be not earning much money, or they have to be handicapped, right? Again, I want to highlight that there's a cap of $8,000 for tax relief purposes, but this is not stopping you for topping up like $100 or $200 or $300, right? In fact, I've heard of people who top up, small amounts every month, just so that they can keep themselves disciplined with their financial goals, right? You have to take note that there is no transaction cost when it comes to CPF top-ups. You can choose whatever denomination you want. I think up to $1, right? So feel free to top up any amount that makes sense for your based on your financial circumstances. Okay, that's about it. And I also have to highlight this very attractive scheme for you, right? The matching retirement sum scheme, right? So this is a scheme that is meant to help elderly Singaporeans be better plan for their retirement, especially those that has a low CPF balance, right? So if you look at the column on the right, who is meant to benefit from this scheme is meant for older Singaporeans with a retirement account less than the basic retirement sum, right? And it's not earning much income, right? So if you were to top up to $600, the government will match $600 for your top up. right? So consider that. Again, I also want to highlight that, even though I'm advocating for the careful use of CPF, I'm not from CPF, but there are some of these schemes that can be really, really helpful for you, for your financial plans. Okay. Hope that piques some interest in some of you, and if you're interested to know more, I can share a little bit more if you let me know through the chat. And education and investments, right? So beyond, the three key pillars of CPF, which is housing, retirement, as well as healthcare, you can also use it for other purposes as well, specifically education and investments. For education purpose, right, I have many friends who relied on their siblings or their parents' CPF, OA monies to help them pay for their tertiary education fees, right? So for education, you can use for your own tertiary education. You can use for your spouse, your sibling, your relatives. It all works out, right? As long as it's with a local university or local diploma courses, right? The criteria of it, I wouldn't go through that. Certain private schools may not be covered, but it covers most of the large tertiary education institutions, right? The way to think about it again is very much similar to using CPF for your housing, right? You're effectively borrowing money from yourself to pay for the education, right? So any money that has been withdrawn from the OAs will have to be paid back with interest. Okay. Yeah, so something to consider. And then of course, you can use CPF for investment as well. But of course, investments is just a means to an end, right? Investment, we don't invest for the sake of investing, even though there are people who do that. But I would like to think that, we invest for our financial goals, right? And that could be for retirement, that could be for housing and so on, right? So for investments, I don't think a lot of people are aware you can actually, use your CPF in a more proactive manner, grow your CPF in a more proactive manner by investing yourself, right? There's a screen list of investment products that is done by an third party appointed by CPF, right? And of course, there's a potential to earn higher returns. And in some cases, there will be a risk involved, right? There are basically zero risk product like T-bills and Singapore government bonds that you can invest using your CPF monies. But of course, there are also riskier products like unit trusts, single stocks on SGX and so on, right? That you can invest with a CPF. But out of all the sharing that I have for you today, I think this is probably one of the lower priorities, right? Because investments has risks. You will need a larger CPF balance before you can think about investing your CPF, right? So you can only invest when you have $20,000 into your OA account and $40,000 in your SA account, right? And more importantly, you need to have a long-term view when it comes to investing. Okay, so that's on investing. And I also want to go through what are your obligations and choices around CPF contribution, right? I believe many people, and myself inclusive, my friends inclusive, when we think about CPF, what our financial goals are and what are the use cases of CPF, right? The overlap is actually very low, right? Very few. The only thing that I can use CPF for my financial goals is retirement. That was what I used to think, right? Or maybe retirement and housing, right? And even for the use case of housing, it's not very great, right? I hope that after my presentation, you understand that it's actually, the overlap is actually very big, right? You can use CPF for housing, retirement, insurance, healthcare, savings, and education, right? And all of these financial goals, for many, I would say, in fact, 99.99% of us, is a part of living, right? A part of our financial needs. And we should be thinking about how we can use CPF for it rather than use cash for it. And why do I put it that way? Right? Because, when we do CPF contribution and we use CPF for these financial goals, right? When we make that contribution, at the point of making that contribution, there is a lot of support that the government is giving for that contribution that you make. I won't go into details of it, but the government is actually matching your contribution, right? For every dollar that you put in, I believe the government can give up to 75% matching. right? And of course, when you make the contribution, foodpanda may also match a certain percentage from your contribution, right? So you are getting more money from it, just that it is within the CPF account, right? The other thing to take note of is that, the money that you contribute into your CPF account won't be taxable, right? But the cash that you earn, if you don't put it into CPF, they will consider it as part of your income, and then you'll get taxed for it, right? Of course, taxation in Singapore is not very high. Liquidity might be a concern for you, right? But it's important to think about the tax benefit from CPF contribution as well. Right. But of course, right, the downside of CPF contribution is that you have to be very, very careful, right? You need to make sure that you still have cash to pay for some other things that CPF cannot pay for, right? Like your groceries, like your milk powder, like the fuel that you will need for your riding purposes, right? So all of these are something that you have to really think through and plan for yourself, right? Again, I would like to highlight that, and you guys will probably already know, right? You are basically like your own boss. You are like your own chief financial officer, right? So you have to think a little bit more about how to do some of this planning and what makes the most sense for you. Okay. So yes, the pros and cons of CPF contribution, right? Some other fun facts about CPF contribution is that, if you, I hope none of you all are in this kind of financial circumstances, but if you have loan sharks, or not even loan sharks, right? Like the bank, you owe the bank some money, right? CPF monies cannot be claimed by the banks or any debtors in case you file for bankruptcy, right? So that's something to take note of. You get fairly attractive interest from CPF monies as well. You get tax relief. I talked about it. But of course, again, it's locked up. There's lower flexibility compared to cash for sure, right? But again, right, the overlap is actually quite significant, right? So you should be thinking about how you can utilize CPF effectively. Yes. So very quickly, I think these are a bunch of printouts from foodpanda, right? For those of you who are under 30 years old, from the later part of 2024, CPF contribution will be mandatory. They'll be starting off with a lower mandatory contribution and slowly stepping it up. And at the end of the 5 years, it will be matching what a regular employee would be contributing for CPF, right? So your contribution would be up to eventually up to 20% of your earnings, and for the platform up to 17%, right? As I was sharing, eventually matching what an employee will be getting, right? And for those of you who are 30 years old and above, the contributions are not mandatory, but you do get a lot of benefits from contributing to your CPF account, right? It's an opt-in, but your Medisave contributions are still mandatory. Okay. So yes, that's about it. Please feel free to ask your questions now. I will be very happy to take it. But as you think about your questions and reflect on what I've shared, very quickly about Endowus, we as a firm, we want to help everyone invest better so that they can live easier today and better tomorrow, right? And when you think about investing, many people think about like, how can I get the highest return? But really, from our firm's point of view, is really thinking about your financial goals and doing better financial planning, right? With better financial planning, you will know what's the right product for you, and then you would be able to invest better. Yes, these are some of how we are different, cases of how we are different from our competitors. I won't go into the details of it, but we are a very convenient platform that can help you invest your cash, CPF, and SRS. And yes, if you are keen to try us out, I think Jia En can help me drop a link on the chat. You can sign up using this special promo code. Typically, our clients start off with $1,000 minimum investment, but if you were to use this foodpanda code, we will be able to offer you free investing, even if you start off with less than $1,000. Right? So try this out. And yeah, I see a lot of chat now. Let me take a look. Yes, so for those of you who have any questions about the previous session or anything administrative at all, just let me know. I'll be happy to cover it. Edmund asked me a question, and am I able to send the deck over? Don't worry, I'll be sharing the presentation over once I'm done uploading it on our YouTube channel. So if you have already left your email by signing up for this webinar, then I will be able to reach out to you. Okay, so there's a question from Noel. Which month of the year would the contribution take place? Right. So based on publicly available information, we don't see and it's later part of 2024, right? So second half of 2024. I don't think it has been finalized by the different parties, so I wouldn't be able to confirm it. But I believe the foodpanda team will reach out to you when it is finally confirmed. But separate from this, I also like to highlight that as gig workers, similar to self-employed people, right, you are able to make voluntary CPF contributions beyond just Medisave account, right? So for self-employed people, they can contribute to their CPF account and get tax relief, have it spread across the OA, SA, and MA, and enjoy the benefits of the CPF, right? So it does not necessarily need to be tied to this gig economy scheme, gig workers scheme. You can actually start contributing now. So there is a question from a rider. He is asking, he's a part-time rider, he's studying. Is it a must to contribute to CPF? Will it affect your entry permit? Actually, I'm not too sure what you mean when it comes to entry permit. But similar to part-time work, being a part-time employee, CPF contribution will be mandatory. Right. So I think that's just the way it is. But to be clear again, this mandatory contribution will only set in the later half of 2024. Is Nigel is asking how much CPF contribution is how does the CPF contribution how much is the CPF contribution, right? So it's a percentage against how much you are earning, right? And they also net off a part of your riding expenses as well, right? So I believe they start off in a very low single digits of your earnings. Then later on, they will step it up to 20 to 17%. So the first year, you'll be very low, right? But I think the details of it, you can reach out to the foodpanda team when it's actually launched. Any age to the contribution? Yeah, so for the mandatory contribution, it'll be for those they are at the age of 30 and below, right? But for those of you who are 30 and above, you don't have to contribute, right? But of course, again, there is a lot of benefits when it comes to contributing into your CPF. Oh, there's a long question from Jimmy. I think we can just take some time to read it first. Yeah, Jimmy, thanks for the question. I don't think there's really a right or wrong answer to this, right? The way I would think about it is that cash and CPF are both part of our wealth that we can use to pay for housing, right? And really depending on whether you have more cash at hand or whether you have more CPF at hand, you can choose to use either to pay for your housing, right? So it's really up to your personal preference, right? So what some people do is that they prefer to use cash to pay for their housing, and only because for CPF OA monies they want it to work harder, so they do a OA to special account, ordinary account to special account transfer, and then they earn a higher interest through their special account, right? So you can choose to use cash or CPF for your housing, but ultimately it really depends on how much cash you have at hand and also what's your financial goals. Okay, I think that's about it. But of course, if you are interested to learn more about like managing your money, how best to use your CPF, you can check us out on Endowus Insights. We have a blog site that I contributes to as well. There's a lot of great financial content, and yeah, feel free to learn from us. I hope this is not a one-off session. There's also another question. If I wish to opt in for CPF contribution, will I need to go through a company like Endowus or directly through CPF board or foodpanda? Yes. So this is yeah. For Endowus, we are not doing anything dealing directly with CPF, right? So specific to what you do for your gig work, right? You will have to go do it through foodpanda, right? And I believe the foodpanda team will be better able to advise you on your CPF contribution, right? So stay tuned, learn from them. What we do as a firm is to help you invest the monies that are already in your CPF OA account, right? So please learn more from the foodpanda team about how that contribution can take place, and also how you can get them a matching contribution from foodpanda as well. And then later on, we as a firm, we only support you if you were to think about investing your CPF OA monies. But other than that, please feel free to, read our content, learn from us when it comes to managing your CPF monies. Okay, Wee Liang, thanks for hearing my sharing. Just to confirm, once the scheme is confirmed, I can still do voluntary contribution and also do the Medisave mandatory top-up. I believe it really depends on your age, right? So if you are younger, I don't think you would need to do the Medisave mandatory top-up anymore, right? It's voluntary from then on, right? But regardless, you should still be able to contribute on a voluntary basis, if you so wish to. But in terms of how much foodpanda or any other gig platforms is able to match it, um, I am actually not very sure. You should be asking the foodpanda team, right? So a bit of context. The way the matching contribution is going to be phased in is it will be starting at a lower amount, and on a yearly basis, they will increase by 2.5% to 3.5% every year, right? And that's across both what the gig worker as well as the gig platform is going to contribute, right? But if you were to want to contribute more than what is mandated, right, I don't believe that the gig platform will match you with your increased contribution, right? So this one, I'm actually not 100% sure. Please feel free to check in with foodpanda. Um, and yeah, but you should be free to do that voluntary contribution. Okay, is there any other question? Yes, there's if you want to reach out to me after this call, please, if you have specific CPF question, please feel free to email me. I'll just drop my email inside the chat. If you want to give some feedback, please share your feedback as well. Yes, I hope that this is very helpful for you guys. And I would love to be able to support you in your journey of using CPF effectively. And yeah, that's about it for today. Thank you, everyone. Bye bye.